traders, welcome to your daily market update for Thursday the 4th of June 2015. And it's all about the euro there last night. We've seen the euro jump very aggressively along with bond yields. The euro also seen the unemployment level drop. We also seen an increase in retail sales, PMI, and all the data pointed to a strong euro. It really rallied, and that was the focus and the key of the market. Draghi did mention that he was disappointed with the recent data, but it seems like it's ticking back up to me, and I think overall he is happy. He just would have liked to have seen it a bit better. He said that he will look past the recent volatility and he won't be front running or front loading QE, so that's a good sign. That was positive for the euro as well. It was a very aggressive move as it was assisted by bond yield, so euro was the big mover in the session because US data was quite mixed, and ADP data was mixed. ISM was weak, so really the US dollar was unchanged. The Great British Pound fell on the weaker data. We've seen weak PMI and things of that nature. So really the euro is in focus, and where it heads to now is really depending on Greece and the Greece deal, if it can actually make a run up to the next resistance level. I'll get into that in a minute, but as you can see here, retail sales and trade balance come out for the Australian dollar quite weak, and that really hit the Australian dollar hard today. So the Australian dollar had seen some optimism in its currency pair, but once again the data's come back in and shown the true colours of the Australian economy. So it is off a little bit. Coming up today, we do have a fair bit of data. We've got some housing price index out for the pound. We have some retail sales or retail PMI for the euro, and we have the Bank of England interest rate decision. Now, this interest rate decision is going to be quite interesting to see if it actually sends the pound lower, as they will have no choice, I think, but to reiterate that they won't be raising rates anytime soon. And the data of late hasn't been impressive. So I think that there is risk to the downside for the pound as a result of the decision and the statement. So I'll have to see how that comes out. And of course, in the US sessions where we get back in and focus on the US dollar, the US dollar has some more jobs data coming out. It's going to be important for tomorrow's non-farm payroll. The US dollar is at a key level, and it's going to be interesting to see how it rolls out from here, and we'll just see if it can hold up. And tomorrow, of course, the non-farm payrolls and Canadian data is going to be key. So let's go in and have a look at the dollar index. So that's the line chart, and as you can see, we have had a pullback after quite a big bounce, and we need it to hold up above 95. Otherwise, I think that we could see things really unwind further. So this is probably the last stop for support. Otherwise, we could be moving and heading lower here for the US dollar. It's going to be up to the non-farm payrolls. I don't think we're going to really get a massive move tonight, but we'll see if we can sustain any support levels, and that'll give the US dollar some hope leading into the non-farm payrolls. The non-farm payrolls, I believe, is going to be not a bad result, because so far the employment data coming out has been quite good, and the employment situation in the US isn't bad at all. They are historically low unemployment levels. It's just going to depend on whether the non-farm meets market expectations. Whether those expectations are realistic or not, I'll chat about those tomorrow. I'll just bring you over and I'll show you the correlation between the euro dollar and the German Bunds. The German Bunds, you can see here in the red, fell off quite dramatically. And I think it was the biggest spike in yields in something like 17 years. And you can see that we have a very strong correlation to the euro. So the euro could be heading lower if the bonds continue to slide, but it's going to be purely a risk-on trade. And if we see a Greek deal coming through, the bond yields could continue to spike, and we could see the price actually continue to fall along with the euro. So we'll have to see how it plays out from here. Of course, we have the non-farm payrolls to contend with versus the US dollar, so that was something that we will keep in mind. Going over and have a look at the charts from the New Zealand dollar versus the US, and as I mentioned yesterday, we were up testing a historical support level and now becoming resistance, and you can see that it has started to fall away, and if we do get a solid non-farm payroll, this could have been the top that we've seen testing, and then we could be heading for some much lower lows. So we need to really keep an eye on the non-farm payrolls, and if we do get a breakdown of this low as a result of the non-farm payrolls, I'll be definitely looking to continue to short this. The Australian dollar had a bounce, as you can see here, on the RBA statement. It has flamed out, and then we are seeing some weaker prices today as a result of the poor retail sales and trade balance data. Once again, just like the New Zealand dollar, we do have a resistance level here at 78.5, but if we do break 75.5 cents, I think that we are going to see some lower prices coming up. Let me go out to the weekly chart, and you can see here that if we take it out, this downtrend should continue to flow on through, and we could be looking at making some lower levels. So it's going to be a very interesting non-farm payroll on Friday, and I'll be sure to keep my nerve about me and really make sure we don't get whipsawed as the news drops. We did get a bounce here on the Great British Pound after 7 straight losses, but it looks like it's already started to stall with a very key looking indecision candle, and depending on the Bank of England's minutes, we will see whether we can actually continue to hold up above $1.51 or $1.52, I should say. And any breaks to the downside would definitely indicate momentum is bearish for the time being. And of course, we've got non-farm payrolls that could throw fuel on the fire if we do get a pretty lackluster session from the Bank of England's rate decision. But I think right now that the pound is on the back foot. The euro versus the US, stellar rally, as you can see. It's now making a run up and testing a $1.13. $1.13 is a key level, and then the rest of the market will be looking for $1.15 if it does break through that. And it's going to be purely subject to the bond market. The volatility index is quite high right now, as you can tell from these gains are very impressive, and I don't think we've seen anything like it in a number of years for a 2-day rally. But we will see whether it's justified and whether the volatility is actually going to cap any gains. But if we do get a weak non-farm payroll result, well, then the euro would be the place to play it, as everybody is excited and bullish about the pair right now, that's for sure. US dollar versus the Canadian dollar, as you can see, it's stuck within this range here. It is a consolidation area that we've seen through before. So 123.5 and 125.5 is the resistance level. If I zoom in for you here, you can see that we have had a bounce. Friday is going to be a really big day for the US dollar versus the Canadian dollar. We've got a host of Canadian data coming out, and we have the non-farm payrolls for the US dollar index. So keep an eye out, but I think we might be range bound in this pair for tonight, and tomorrow I'll talk more on the US dollar versus the Canadian dollar. Oh, and the US dollar versus the Japanese yen has also had a little bit of a pullback here a few days ago, but it's bounced and held up on the mixed results. So it was a very strong sign that we had some mixed, but probably skewed to the weaker side for the US dollar index yesterday. And you can see that we have held up and we are maintaining some support here. So it's going to be interesting to see if we do get a breakdown of this level. I think the non-farm payrolls, if they are weak and we get a breakdown of this level, we will be moving down to test some lower support levels. However, if it does come in and exceed everyone's expectations, I wouldn't be surprised if we punch through 125 and all eyes will be on 130 before too long. Well, that's it from me today. We do have a fair bit of data out. Keep an eye on those key major support and resistance levels. We may get a more subdued session than what we've seen the last 2 days, but don't fear, Friday will definitely get us back into the groove of some volatility, I'm sure, as non-farm payrolls tend to do. I'll be back again tomorrow, so until then, trade well.